Hello, I am John Coles, the managing broker at KW Reston and Fairfax Gateway of the Alliance Group, and today we're going over the FHA Financing Addendum for Maryland Realtors. So remember, everything in Maryland is an addendum. You have the main contract, you'll have your financing addendum, your home inspection addendum, maybe other addendum. So this addendum dated, we would put today's date in. And again, uh, our program fills in the buyer and seller's names, thank goodness, and also the property address. And we're going over here the loan details. So the contract is contingent upon buyer obtaining mortgage issued by the Federal Housing Administration, FHA, and secured by the property as follows. So here's where it's very important that we talk to our lenders, call our lenders, to figure out what the mortgage insurance premium amount is going to be for the loan. The lender can always tell you. The loan program is going to be FHA. And then we need our base loan amount. And really, you should do this left column and right column. So let's say our mortgage insurance premium is $5,000. Our base loan amount is $495, which means our total amount is going to be $500,000 for the loan. Usually it's going to be 30 years, but it could be less. And an initial interest rate. Again, the lender will be able to tell you this. I'm going to use 6.25. If there's any sort of additional financing program, that would be added in the next line. Excuse me. Buyer agrees to pay lender loan origination fees or discount fees in the amount of, and again, we would fill that in here, of the loan amount and seller agrees to pay loan origination or discount fees of whatever of the loan amount. Usually you're not going to see this about seller paying fees, but if you could negotiate it, it might be there. Buyers shall receive the benefit of any reduction in said fees. All loan insurance premiums, as required by the lender, shall be paid by the buyer. So any loan insurance paid by the buyer. Now, big bold print, by accepting a loan agreement whereby the interest rate and loan discount fees are not being locked in, buyer agrees to accept the rate as charged by the lender at the time of lock-in and the responsibility for any additional fees charged. Buyers shall remain bound to perform under the contract, notwithstanding any such changes. So they need to move forward, even if the rate changes. Paragraph number 2, monthly payment. Payments to the lender shall include principal and interest plus 1/12 of the annual taxes, ground rent, special assessments or charges, if any, hazard, fire insurance premium, flood insurance, private mortgage insurance where required, and an FHA MIP payment, which is mortgage insurance premium. So we're letting the buyer know that upfront, more than likely they will have principal and interest, taxes, insurance, also known as PITI, principal, interest, taxes, insurance, and possibly, more than likely, their MIP, mortgage insurance premium. Paragraph 3 goes into loan underwriting. Buyer and seller understand that the lender will have to resubmit to the loan to underwriting if, from the time the buyer's loan application was approved to the time of settlement, if there are any increases to the interest rate and or the loan origination or discount fees. So the loan could go back into underwriting. To the extent such changes do not conflict with the conditions of the contract, buyer agrees to comply with the lender's requests for additional updated information to approve the loan. Seller agrees to cooperate and timely respond to requests for information or documents made by the lender and/or additional financing programs. So we're letting them know that they need to cooperate with the lender to get the loan closed. Now, one of the interesting things here is what we call the FHA amendatory clause. And again, this is unique to FHA. It is expressly agreed that notwithstanding any other provisions of the contract, buyers shall not be obligated to complete the purchase of the property described herein to occur under penalty by forfeiture of deposit or otherwise unless buyer has been given in accordance with HUD, FHA, or VA requirements a written statement by the Federal Fair Housing Commissioners, Department of Veterans Affairs, or by direct endorsement lender, setting forth the appraised value of the property of not less than, and this is where we put in the sales contract amount. We're going to say the sales price is $550. And again, that goes in that line. Buyer shall have the privilege and option to proceed with consummation of the contract without regard to the amount of the appraised value. So again, if it does not appraise at $550, the buyer can still move forward. Now in bold, the appraised value is arrived at to determine the maximum mortgage that the Department of Housing and Urban Development will insure. HUD, Housing and Urban Development, does not warrant the value or condition of the property. Buyer should satisfy himself, herself, that the price and condition of the property are acceptable. So, an independent third-party appraiser appraises the property. They say it's $550, we're contract price, we're good to go. It could come in higher, it could come in lower. Notice the dollar amount to be inserted into the amendatory clause is the purchase price as stated in the contract. So, contract says $550, that's what goes in this line. If buyer and seller agree to adjust the purchase price in response to an appraised value that is less than the purchase price, a new amendatory clause is not required. So this one is just fine. However, the loan application must include the original contract with the same purchase price as shown in this amendatory clause, along with the revised or amended amount. So that generally falls on the lender because they're the one creating the package. The next paragraph on the next page here goes over mortgage insurance. Buyer agrees to pay mortgage insurance premiums, MIP, as required by FHA regulations. MIP must be paid at the time of settlement in cash or included in the loan amount. And in addition, a mortgage insurance premium equal to a percentage of the loan amount must be paid monthly thereafter. So at settlement, they're paying a mortgage insurance premium, and every month they're going to be paying an additional mortgage insurance premium. Talk to your lender. The lender will explain all of the numbers. Paragraph 6 goes over wood-destroying insect inspections. For FHA loans, usually they are going to require a wood-destroying insect inspection as a condition of the financing. And again, it is the buyer that will conduct the inspection at the buyer's expense. Lender required repairs in connection with a lender required wood destroying insect shall be performed in accordance with the lender required repairs paragraph of this addendum. Seller shall have no obligation to consider any other request for repairs and or seller credit in connection with the lender required wood destroying insect inspection unless a wood destroying insect inspection was negotiated as part of the property inspections addendum. In all transactions involving FHA financing, all fences, outbuildings shall be included in the inspection and certification. So that was quite the paragraph. Let's break it down. Buyer at buyer's expense is paying for the wood destroying insect, and it will be performed in accordance with the lender required repairs, which we're going to talk about in a minute. Seller has no obligation to consider any request for repairs or credits as part of the home inspection. So, if the buyer did a home inspection and didn't ask for the repairs, but the wood destroying insect has it, it falls here under this wood destroying insect inspection. And fences, outbuildings will be included in the inspection and certification. Now we go on to number 7, lender required repairs. With FHA loans, the appraiser becomes the inspector. So they're looking for mainly health and safety issues, habitability issues. They're going to be looking at chipping and peeling paint, handrails, GFCI outlets in the kitchen and bath. These are the top 3 things that appraisers look for. Chipping and peeling paint, handrails, and GFCI outlets. In the event FHA and or lender requires any repairs or improvements to be made on the property, seller agrees to perform the required repairs and pay the cost thereof at or prior to settlement, provided the total cost does not exceed, we can put something in here like $500. We can put, say, $1,000. Basically, you're pre-negotiating the repairs. In bold, this cost shall be in addition to the seller's obligations under the terms of the contract. Should the cost of the required repair exceed the repair amount, so let's say it's $3,000, seller may elect to pay the total cost and contract remains in full force in effect. Or the seller may terminate the contract by written notice to buyer and include a written estimate of the cost of the required repairs, say $3,000. Said written notice shall be provided to buyer within 5 days of seller's receipt of the written estimate. Letter C, the contract shall remain in full force and effect within 5 days of the buyer's receipt of the seller's notice of termination. Buyer elects in writing to pay the difference between the cost of the required repairs and the repair amount listed above. So that would be, if it's $3,000, seller's agreeing to pay $1,000, buyer pays $2,000. And letter D, if neither buyer or seller elect to pay the excess, the contract shall become null and void, and deposit monies will be returned as part of the deposit paragraph. So this is an important paragraph to know if their lender required repairs. As an agent going into an FHA transaction, you should know to be looked for chipping and peeling paint, more than 3 steps without a handrail, GFCI outlets in the kitchen and bath. So it's important to know what to look for. Paragraph 8 is certification. Seller, buyer, broker hereby certify that the terms of the contract to which this addendum attached are true and to the best of their knowledge and belief. Any other agreements entered into the parties with respect to purchase and sale of the property have been fully disclosed and attached to this contract. What does that mean? That means there's no under the table dealings in this transaction. So if the purchase price is $550, they're agreeing that the purchase price is $550, and there's no mortgage fraud. If it doesn't appraise and the buyer says, well, we have $50,000 of cash, we'll give it to you, Mr. Seller. Can't do that. There's an FHA required notice here. Buyer acknowledges receipt of HUD form. For your protection, get a home inspection. As the buyer's agent, when we're filling out this form, we need to give that notice, and the buyer needs to initial that they receive the notice. I have the notice initialed also. All other terms and conditions remain in full force and effect, signed by the buyer, the seller. And again, talking back about this certification paragraph, the agents also need to sign that they certify paragraph 8, that again, that there's no under the table dealings. So listing agent or broker signs it, buyer agent or broker signs it, or again, if there's a cooperating agent or broker. So basically, listing agent and buyer agent sign this part of the contract in an FHA transaction. So this ends our FHA Financing Addendum. And stay tuned for more forms and addenda coming up.